Okay, so let's make a full breakdown of the situation that we currently have on Euro USD. Now, starting from the monthly time frame, we can clearly see that we had a market that had rejected a very strong level of structure. In fact, from here, the market had created this move to the upside, and again, the market went to test this incredibly strong level of structure here and failed to break below the level multiple times. Then what happened? The market started this very strong move to the upside, and specifically after this monthly candle, which is the candle, as you know, that the next candle is supposed to fill in the wick, that we definitely expected the market to make this move to the upside. Now, why do we really expected the market to make this move to the upside? As we said, we had this double bottom, but we also knew that from an institutional perspective, if we check the COT data for Euro USD. And keep in mind that if you want informations on Euro USD, what you have to do is check the data for the Euro because you're already checking Euro USD since all currencies on the spot are traded against the USD. So checking the data for the Euro, what we can see? We can see that longs went from 147K all the way up to 262K. So institutions clearly were adding longs on the Euro. And if we look at the net positions, we went from minus 114K net positions with 271K shorts and 157K longs, all the way up to the completely opposite. So from having more shorts than longs to having more longs than shorts with 262K longs and 81K shorts. So clearly institutions were adding longs on Euro USD. And in fact, this move to the upside on Euro USD was very expected and the market followed to the upside very nicely. Why? Because institutions clearly were adding longs on Euro USD. Going down on the weekly, what do we have? Now, on the weekly time frame, we have a market that has created a nice impulse followed by the correction. Now, we definitely expected this correction. Why? Because we had the previous resistance, now turns support at this level, which was also in confluence with the 0.382 of the Fibonacci taken on the impulse, creating a confluence of support at this area that we definitely expected the market to test before the continuation to the upside, which is exactly what the market did. And from a daily perspective, and by the way, just to back things up and go linearly, what do we have on the weekly? After the continuation to the upside, we have an overextended market and we expect the continuation to the downside for a deeper retracement. Now, as we said here, we wanted information on this retracement and we took our Fibonacci on the impulse. The same thing, we have to do it also here. If we want information on this retracement, we have to take our Fibonacci on the impulse. And by doing it, we have a first downside target, which is this level here, so the 0.382 of the Fibonacci taken on the impulse. So we want to see a first retracement to this level, but if we take our Fibonacci, we also realize that actually the Fibonacci level that is aligning the best with structure is the zone in between the 50% and 0.618, since here is where we have the previous resistance, which is now turned support. So actually we have a deeper target for Euro USD for the retracement. Now going down on the daily, what do we have? Now, first of all, if you remember from our previous analysis, as we said also on the weekly, this retracement was definitely expected. In fact, I will link in the description the previous analysis in which first, from here, we said that we wanted to see the market make a move to the downside to this level exactly before a rejection to the upside. And then I will also link in the description the analysis in which I said, after the market had created this retracement, that we definitely wanted to see this inverted head and shoulders and this explosion to the upside, which is exactly what the market did. I will link all this to previous analysis in the description so you can go and check them out for more reference and free education. So at the moment on the monthly and weekly, we would like to see a retracement from all the bullishness that we have just seen, because as we said, we have a huge impulse and we would like to see a retracement to this level. However, if we go down on the daily where we just were, what we can see? We can see that clearly the market still has structure to the upside at this level. In fact, from here, the market had created this move to the upside, meaning that this is the support. This is where the previous low is. which means that the market is still in a bullish structure. So on the monthly and weekly, we have a clearly overextended market from which we expect a retracement. However, we know that institutions still haven't started to take their profits on the longs, and we also know that clearly we still have a bullish structure. So how we'll be approaching this situation? Now, the market from here can and should continue to the upside. So we cannot be taking any shorts because on the daily we still have bullish structure. So we cannot be taking any shorts. However, this situation might change. So if the market will actually manage to make this break to the downside and basically create again bearish structure, then after the break, all this previous support here will be turned resistance at this area. And after the break, on the retest of the structure, what we will be doing with students inside of this area, at that point, only after the break, on the retest, we will be monitoring price action on the 4-hour time frame, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside and the creation of this impulse correction and impulse pattern to the downside to have the deeper retracement that we want to see from the weekly and monthly. However, on the daily, we must acknowledge that we are still above support, and until the market will remain above this support, the market can and should continue to the upside. So only if the market will break on the retest, this is where we will be looking for the shorts. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you. And I will see you in the next video.